I went really viral. I gained like 20 to 25,000 followers within a matter of 48 hours, which was one of the most insane 2 days of my life. It was
It's
absolutely absurd.
insane.
I almost gained more followers than likes on the post, which is wild. Like it's like just a wild thing. It kind of had a moment where, wait a second, what is this?
Have you ever heard of the social media influencer who built a multi-million-dollar business around their brand? Yeah, probably. But what about the one who built their brand around spreadsheets? Well, today I sat down with a CPA about the least sexy brand you can have who did just that. So if you're curious about using a personal brand to grow your business in unconventional ways, then this episode is for you. I'm just trying to answer one question. How the freak did Kurtis Hanni build a multi-million-dollar business off of some viral tweets about Excel? Let's hop in. All right, Kurtis. Kurtis Hanni, welcome to Economics. Stoked to have you here.
Good to be here, man.
Your podcast office, honestly, looks incredible. The shiplap, the pictures. I'm very jealous. I'm not going to lie to you. I look like I'm in a Russian prison camp. You look like you're, got your life figured out. So thank you for joining me and making me feel bad about myself.
Glad it at least looks that way at some point, right? So.
All right. Well, I'm excited to have you on. You have both a boring business and a very new age business. So I want you to get into it. Briefly explain, what is your business and how do you make money?
Yeah. So about probably 2 years ago, I started a fractional CFO business. And so for fractional CFO work, it's much like, you say new age because we don't have to have clients in our physical location. Everything is done online. And I think COVID really moved the industry forward substantially. My clients are all on monthly retainers, meaning we charge a flat monthly fee. And with that flat monthly fee, they get a set number of deliverables, as well as the ability to contact us at any time about different issues and things that pop up. Our fees tend to be between $3K and $10K a month. We're really focusing on that SMB space, meaning anywhere from say 3 to 5 million in revenue, all the way up to have clients that are north of 30 to 50 million in revenue. And so kind of a wide array. My firm right now, which it's probably changing down the line, but my firm right now is primarily focused specifically on the deliverable as it relates to fractional CFO.
So let me just kind of break down fractional CFO. So CFO is a chief financial officer. And recently, some of these companies have been coming about where they, I'm a small business. I can't afford a CFO full time. But what I can afford is a certain amount of money per month towards a CFO. And so these agencies, these companies have started up where they fractionalize it. I've seen now fractional COOs. I've seen fractional CEOs. So this fractional thing is becoming new, but it's not necessarily unique. It's growing in the space. Can you talk a little bit about like what does a CFO do? Like not even your agency, the fractional piece of it, just like broadly, what is a CFO?
Yes, I break it all fits into the world of like accounting and finance, right? And so I break that into really 3 different verticals. First, you have transactional work, and that's the debits and credits. That's coding transactions where they're supposed to go. That's all the accounting controls, all that sort of stuff. Next, you have the tax piece, right? And business owners are extremely worried about that tax piece because obviously their taxes directly determine how much goes into their pocket at the end of the day. Then the third leg of that stool is the strategic piece. And so that's being a strategic partner for the business owner. So those are 3 unique roles with 3 distinct purposes. And a good CFO in a SMB space is going to be focused on that strategic piece, meaning they're not doing day-to-day accounting work. They're focused on forecasting, forward-looking things for the business. And what that ends up being is you deal with banking relationships, you deal with outside parties, if that's investors, if that's bankers, if that's CPAs, whatever those outside parties are. And you really become a kind of strategic launching point for that business. What I viewed my job as a business owner, it's a lonely proposition, right? You're the only one who knows everything. You're taking all of this on your shoulders. So I tried in my previous CFO roles to be the one person that they could talk to that would have that full picture. So I viewed myself as a partner in that struggle with them. And I think a good CFO is able to do that. The actual job duties are going to be way different from business to business, depending on your competencies. Some will get into sales, some will get into marketing, some will be really heavy in the accounting world. It's a job that flexes with the business and with the person in that role. And so it is one of those things that there's not like a clear, like, this is the exact thing you're doing day in, day out.
Admittedly, I'm an idiot, but I think that's the best explanation I've ever heard of a CFO. Is you've got on the finance side essentially three buckets: transactions, tax, strategic. And for small businesses, especially when you're sub a million, even the sub 5 million, the transactions piece makes sense, right? I
Mm-hmm.
hire an accountant. Maybe I get big enough and I get a controller, and they're just making sure that my credit card transactions are coded appropriately, that my reimbursements, that my mileage, like whatever else is put in the right places so that I can get a monthly snapshot of where my business is. Because I need to know how I'm operating in order to make decisions for the future. So that makes sense to me. The tax piece has always made sense to me too, right? Where it's like, okay, I have a CPA. They also need the bank transactions. They need my financial statements in order for them to file my taxes. The third one, though, like the strategic piece, has always been a black box for me. Because I'm like, well, like, what does that mean, strategic relationships? What does that mean, planning and forecasting? If you were to kind of dig into that third leg of the stool, which I think, especially as you're growing, is an incredibly important piece of the stool, how would you break that down further? Like, I love the way how you're like CFO, there's three buckets. Would you say there's a couple of buckets in that strategic bucket as well?
Yeah, that's a great question. And if you think about it from the nuts and bolts, is actually, I'll back up and say, like, how we go about onboarding a new client is we try and hit on those buckets, right? You have revenue, you have cost of goods, you have expenses. That's just on the profit and loss side. Then you have on your balance sheet, you've got all your liabilities, you've got how you manage your cash. So when I come into an engagement, the first thing we do is figure out how we can improve your cash conversion cycle. How can we collect money quicker from the vendors? How can we deal with payments, deal with cost of goods sold, deal with terms on that other side? How can we improve inventory management? Then kind of the second piece is, what are ways that we can improve revenue? Is that increasing pricing? And I say revenue, but it could be margins as well. Is it
Sure.
increasing pricing? Is it changing structures within the business? Is it seeking out new lines? And so when you think about strategic, it's like asking you, well, how are you going to increase revenue? Well, there's
Mm.
a million different answers to that question. And so that's a deal where I may not have an expertise in every way that they can increase revenue, but I have enough experience that I can ask the right questions to get them thinking about things that they've potentially not thought about before, or really go through the thought exercise of how would we, if we wanted to get to this goal down the road, how would we do that?
You're so good at this. Maybe it's just like me, but like, I don't know, the way you're speaking very clearly and dumbing it down enough for me to understand, like, oh, that makes sense, right? Because you on the accounting side of things, which was that first bucket, from that I get the P&L. And the P&L helps me understand, okay, how are we operating? But that's not a snapshot of the cash going into my bank account. So when you bring up the balance sheet, which has your liabilities and it has your assets, and you start talking about the cash conversion cycle, like that clicks for me in why it's important to have a strategic relationship with a CFO, because it's much harder as a business owner to take the P&L, which makes sense. Oh, okay, this is where we accounted for everything. This is the cash in and cash out. And then to translate it to the balance sheet where it's like, well, how did that cash get there? Oh, okay, it was revenue, but actually it wasn't cash in. It's an account receivable. We provided the service, but it takes 30 days to collect. So this is actually our true cash picture. Like, having someone to help you walk through that and understand your cash conversion cycle is incredibly valuable. Anyways, I think I interrupted you mid sentence, but that's
Yeah.
like clicking for me on the strategic side.
Yeah. And I think like an example of this is I just spoke to someone in the last couple months that they were making money from the profit and loss. And I'm just going to use round numbers here because I'm not obviously like trying to disclose client information, but
No. Yeah, yeah, yeah.
say, let's say they're making $50,000 a month and
By making, you
um,
mean profit?
in profit. Yeah. Had
Okay.
$50,000 a month in profit. And they're like, but my bank account is flat every single month. Well, when we look at it, I'm like, well, here's why it's flat is because you have this debt, and you can draw a picture of
Mm.
you have 50,000 that's supposedly coming in that you're supposedly making, but 45 of that is going to distributions and debt. And of course, your balance isn't going. But when you bring in the projection piece and saying, well, actually, this debt is rolling off in 3 months, the next one is rolling off in 6 months. If we look 6 to 12 months down the road, we can see that your cash balance is going to start to build. So while it feels like you're underwater right now and you're not getting the returns you expect, wait 6 months and you're going to be at this cash position within this range. And in a sense, as the strategic CFO, my goal is to say, this is a prediction of where we're going to be down this road. And then we've tried and validate that prediction. Part of what's great about those predictions is you can use those predictions. And after you've gained a level of certainty and trust with that relationship, to make strategic decisions today that don't pay off for 6 to 12 to 24 months because you have a deeper understanding of what's coming. And so you can make those decisions with way more certainty than you ever could have in the past because you can have confidence in it.
And almost as important, it prevents you from making poor decisions. Like
Yes.
if I'm a business owner and I'm like, I don't get it, I'm making $50,000 a month, but my bank account isn't moving, I got to change something up. And then you come in and say, no, you're good. You're paying off these debts. In the next 3 months, you'll get here and you'll start adding a lot more cash. I may have made a decision that was drastic, but
Yeah.
I didn't need to. And with your added perspective, it helps me make better decisions. It reminds me, my very first job out of college, this was 12 years ago now. I just got thrown into this opportunity. I worked for this company that was very entrepreneurial, and they just said, basically, you handle the P&L. And we bought this company, and the company the previous year had lost $400,000. It was a healthcare company. And so I came in and I made some simple changes, but we ended up making $600,000 the next year. So we went from a $400,000 loss to a $600,000 gain. And like these are about numbers. I could be off a little bit one way or the other, but it was about $1 million swing. And people looked at me like I was a genius. They're like, oh my gosh, the whiz kid, he's here. There's only one thing that we did. And it sounds so simple, but we just improved collections
Yeah.
because they were writing off like 12% of their revenue. They
Wow.
just weren't collecting it. And in healthcare, we're not McDonald's, right? I go to McDonald's, I order a hamburger, I pay you for that hamburger today, and you give me that hamburger today. In healthcare, we go and provide services at somebody's home. And then 60 days later, on average, we're getting a reimbursement from Medicare or from the insurance provider or even from the patient themselves. So there's this like 60-day gap in between the time where we provide service and when we actually get paid. And if you're not managing that appropriately, then it feels like you're not making as much money, and you may make really poor decisions because your AR balance is growing like crazy, but your cash isn't growing. And it's because, well, all of your cash is sitting in accounts receivable. So for me, I looked like a genius, but really all it was like tweaking some of our collections and making sure that we weren't losing as much out the door. But the operations were pretty much the same. Like the people were the same. The referrals were the same. It's incredible how like one tweak or one focus on something that doesn't feel related to the business can make all the difference. And that's where, like, hearing you talk about your role as a CFO, it can be incredibly valuable in making those decisions. Did it take you a while to feel that value, or have you kind of always known from day one, like, hey, if you don't know your accounting, if you don't know your cash situation, you're up a creek
Yeah.
without a paddle?
Yeah. So this kind of just a reflection on my career as a whole is I got an accounting degree, but I knew I did not want to go into the traditional like public accounting path.
Mm-hmm.
So I started out in private businesses. And really quickly after that, I realized I wanted to go to these smaller businesses. And frankly, is because I looked at accounting as a way to translate business, but I was not obsessed with accounting, right?
Yeah.
So even from very early on, yeah.
Who is?
Well, the crazy thing is there's a lot of people that are, which is
Oh,
absurd, which
really?
is crazy to me because like they are, and that's like the very prototypical CPA. Like they're really locked into all those debits and credits and the way you
Mm,
code things, and they get really into the weeds on all this stuff. And I've always said, man, all I want to do is help a business sing. I want to help a business get to the next level. It's probably naive of me, but I thought, well, I'd rather just be in these small businesses because I can do more than just the accounting work. I get a chance to be a part of these conversations. So from really early in my career, I went into a place where, week one, I had no one that I was supervising, but by the end of year one, we had 3 people because we tripled in size and really quickly had to figure out how to do all these
that's
things that
awesome.
I'd never done before. And so I got lucky in that sense, but it was what I wanted because I've always been a tinkerer. And so that worked really well in these situations where we were just learning on the fly. And so it's through just getting myself in the deep end and trying to dig out of that hole that I've gained a lot of my experience. And what I've been told from the business owners is like, because I'm always kind of the outsider looking in, I'm never the one that's the expert in these. I have a unique way that I can look at things because I don't have all of the junk, the previous experience to say, this is the way we've got to do it. And so um, that's what got me excited about the fractional CFO work is because it's an opportunity to do that.
So walk me through, how did you get into it? What were you doing before? And what was the light bulb moment where you're like, oh, I could start a fractional CFO company?
Yeah. So I was in a business. We did physical security services, and he had 6 or 8 other businesses that I was.
Physical security services? What is that?
Yeah, physical security guards. So security guards standing in buildings, securing
Oh,
things.
okay.
Yeah. And he was talking about starting a family office. And I really wanted to do that because
Dang.
I thought that was a cool
That's how much
deal.
money he had?
Yeah, on the low end. He knew a lot of family offices. And so he was looking to make other investments. And so we were
All
going to
right.
go
So
down that route.
this is my understanding. Family offices are like $100 million is the minimum threshold because, so let me just explain family offices really
Yeah.
quickly. A family office essentially is when somebody's wealthy enough to pay and have a team that manages their investments for them. And in order to pay for a competent enough team that manages your own investments, you need to be generating enough money from those investments in order to be able to afford them. And so family offices typically have a chief investment officer, a chief financial officer, and then some analysts maybe that are looking at deals and helping you close deals. And then they've got to pay for those transactions, et cetera. So usually the threshold for that is like $100 million because if you just parked it in treasuries and you're generating $5 million a year off of that $100 million, theoretically that could pay the salary and the transaction costs for that team. So that's kind of where the $100 million minimum threshold comes from. So when you're saying like you're working for a guy who owns a physical security company and he's like, oh yeah, I want to start a family office, I'm like, como say what?
That business was not that big. And when I say family office, I know a couple of people that are in family offices. They're billionaires, but they only have 2 people in their family office. You got to remember,
Mm-hmm.
we're down home Oklahoma people. Like we're not going this northeast, you know, this northeast deal.
We're not yet those Yankees.
Right, exactly. So this family office would have been, me running it with maybe one other person that's kind of
Okay,
an analyst
fair.
sort of deal.
Yeah, that's
So
fair.
so it was basically he's looking for ways to spend his money. He wants to invest in other businesses, and I wanted to have the opportunity to do that with him. Um, through various means that didn't happen or was not happening in the speed that I wanted it to happen. So I thought, let's go seek out another opportunity. So I moved to another business where I was going to become one of 5 owners in that business. That was the plan. It was not written in a contract, but that was the plan. And frankly, the business was smaller than what I was used to. So I got in the business and I was a little bit bored, meaning there wasn't enough to do. They were overpaying me for the job it was. But again, the goal was to become part of that ownership group. And so I started posting on Twitter. So all the stuff that goes on that world.
Yeah.
And it kind of blew my mind what the opportunities were. And through that, I basically had two birds in hand. As I said, I've always wanted to do something a little entrepreneurial, and I can do that, or I can continue down this path of being one of these 5 owners. And when I looked at both of those, I said, I'm going to regret if I don't take a shot on myself to do this. So I was going to be offered ownership before we got to the document parts. I just said, listen, I have to bow out here. This is what I'm going to do. And it was a good situation. But so that kind of started my journey.
You started going on Twitter, and you were in the days of social media where you were one of the first to post those threads. It was like, what's a P&L? Let me break it down for you. And it wasn't like, I said that kind of jokingly. They were very good breakdowns, right? In much the same way you're explaining this at a 4th grade level for me to understand accounting. That's what your threads looked like as well. And that's why they were popular. And you grew to, I don't know, 250,000 followers or somewhere in that, maybe more than that, in that ballpark. Were you starting to get business from those people? Like, were they starting to reach out to you and say, hey, could you do my accounting? Or like, how did it turn from getting followers to a business?
Yeah. So I started and I have like, I don't know, 180,000, but we've talked about this. It's kind of, I've not nurtured that asset.
But you
so
bought your
it's
followers,
good.
right?
I bought them. That's exactly right. Yeah. We're going to leave it all out here. Leave it all. Yeah, no, unfortunately, I was a little bit familiar. I was a little bit lucky that I was in the day when followers were a little bit easier than what they are now.
Yeah.
And so I had a lot of growth. And honestly, some of that growth too was outside of the SMB space, because when I got on, honestly, it was a game. I treated it as a game. Anyways, that's a little sidebar. But where this turned into kind of a job, you could say, is after I posted that first thread where I went really viral. I gained like 20 to 25,000 followers within a matter of 48 hours, which was one of the most insane 2 days of my life. It was absolutely absurd. I almost gained more followers than likes on the post, which is wild. Like, it's like just a wild thing. It kind of had a moment where, wait a second, what is this? And it made me sit back and think. And I was actually talking to someone about a new potential opportunity. And I started looking at this and I said, well, if you look at the economics of just a info business as it relates to these online followers, this is what this could potentially be. So I started a cohort, started a newsletter, did some things, but my thinking was that was all going to be on the side of taking this ownership in this business. But then because of the followers, because of the newsletter, because of all this, I started getting random consulting inquiries. And so had a few consulting opportunities. And in doing that, I realized that while I don't like being on calls all day, right? That's the bad part of it. I like the troubleshooting that you do in this fractional CFO world.
Yeah.
And I was only getting to do it a portion of the day over here. And I was dealing with all this other junk. And I realized, well, that can actually be the job, And so that's how I initially looked at it, was that it would be a new job and that I would be doing a lot of consulting. And then over time that's evolved, to kind of a much larger, different vision. But that was kind of the initial. I can make more doing consulting on my own than I could doing this. And between the consulting and kind of the info products, be able to make something that was much bigger than the opportunity I had otherwise.
There's a saying in venture investing, which is first-time founders focus on product, second-time founders focus on distribution. So like, distribution is incredibly important. There's a reason why people spend tens of thousands of dollars just to reach, 20,000 people in a demographic. But basically, it sounds like what you realized was, hey, I have all these eyeballs on me. I could turn this into something because I have these people who are now following my stuff. So let me capitalize on this distribution channel that I've kind of fell into, however you want to call it, lucked into, create. I'm not saying you lucked into it. I'm saying your thinking at the time was like, hey, I got all these followers. Exactly. So let me turn this distribution channel into something. And the something is I can offer fractional CFO services.
Yeah, 100%. 100%.
So what does that business look like? Like, just speak broadly for the industry. What are the margins like? How much revenue are you generating per customer per month? How many customers can you handle? Anyways, let me stop asking questions. What do the economics look like?
There's kind of two sorts of these businesses. One is the traditional old fractional CFO model, which was you could handle 3 to 5 clients where you're literally generally going into that client's office, sitting there for 1 to 2 days a week and collecting a paycheck from them. Like this is the old school fractional CFO model.
Okay.
What really changed with COVID is people became comfortable with, oh, we can do Zoom meetings. So we don't have to physically be there. It can change the way the engagement is. So in the new fractional CFO world, what that also does is that brings the engagement fee significantly down. Because before, if you have a CFO level talent, it's these guys that are at the end of their career that don't want to take a full-time gig, that just want to work 3 days a week. They'd go sit in an office for 3 days a week, and then they'd go play golf the other, 3 or whatever it was. And this
that's only 6 days, Kurtis.
That's only 6 days. Shoot, 6 days. Well, I'm day of rest. That's right. So the new model has become, again, I mentioned the fee range of 3 to 5K or 3 to 10K per month per client. And
that's dependent on revenue.
On revenue side, a typical fractional CFO can probably have up to 15 clients at that range. It just kind of depends on the level of engagement that it is. If you're doing 15 clients, you're going to have not much time to do anything else because you're going to be really heavy in client work. But the new model also brings in kind of overseas support, so outsourced professionals that kind of help with fulfillment, whereas the old model was just this old stodgy guy that would just go in, like I said, go in and sit, and that would be the deal. So this new model is opening it up to businesses that are at a more entry level scale, like moving it down the scale of when you can hire a fractional CFO. In margins, I'm not a great example on margins, but for most of these fractional CFOs are a business unto themselves with maybe a handful of contractors. So margins are going to be super high. So if you're collecting a $5,000 fee, 4 of that 5 is going into that owner's pocket, fractional CFO firm. Because at that level, it's treated like it is your job. You're not building. When you get into the bigger scale fractional CFO, I don't have a good sense of what margins are. And I think margins are rapidly evolving because, again, before it had been all US based, and now they're seeing a lot more outsourcing. So there's a changing margin structure in the business at large.
Like when I said in the very beginning that you've got a kind of an old school business, but a new model, I wasn't even talking about the overseas stuff. The stuff I was talking about was this distribution channel that you've cultivated. Yep. Can you talk a little bit about that? Because like one of the questions I had for you was, hey, what's your CAC? But it looks like you have no customer acquisition costs. Like you're not out marketing. How do you get customers, and how do you think about leveraging your distribution channel in order to get customers for your fractional CFO company?
Yeah. For me at this moment, I'm lucky that I have my email newsletter and my followers on social, and that the only way that you can see that I've probably mentioned my fractional CFO business a handful of times in each location. I do have at the end of each email, I have, hey, if you want to connect further, here's a fractional CFO business that I have. But I've not even overtly mentioned it on social or in my newsletter other than a few passing mentions.
Interesting.
So to get to it, you have to go to my personal website and you have to click through a few different links to even see that business.
I'm not on your newsletter. I know your social is, right? But what is your newsletter about?
Yeah, my newsletter is called Frameworks in Finance. So my goal is to talk to small to medium business owners and just do financial education, so
they know that you've got CFO level skill set. Yeah. They like the information that you're giving to them about how to manage their business. So it's not necessarily a jump. Like you're not like, hey, I'm a golfer. Let's talk about golf. By the way, I have a CFO company. Like it's
correct.
It's tailored. It's targeted at these individuals.
Exactly. And so for now, I've just taken what's come my way and I jump on calls and figure that out. In the future, that's going to change because for me, I've only been full-time for just under a year now. So I've been trying to really refine delivery and to refine my systems with my team so that I can onboard people much more efficiently. And so we're kind of getting to that point now, and going forward, the way I see my initial marketing channels are going to be to talk much more openly about my business, meaning I'm going to talk about it on social. I'm going to talk about it openly on the newsletter. And then once I've kind of seen how that lead flow falls out, my next step is to do some outreach, but that outreach is going to be outreach to people that are already connected to me through either a social or a newsletter. So we'll figure that out as we get there. But yeah.
Tell me about your newsletter. So like, I know you have 180,000 followers on Twitter. Are you on other social platforms or is it just Twitter?
I'm on LinkedIn as well. I
Okay,
honestly don't know how many followers I have there, but
that's fine.
yeah.
Your newsletter, how big is your newsletter?
Yeah, I have 40, just under 40,000 people on my newsletter right now. Yeah. So
What?
yeah. So my
Holy crap.
yeah,
That's a lot of freaking people on a newsletter, Kurtis.
it is. It is a lot. It is a lot. And it's a
40,000? I'm
yes.
sorry. I didn't. Oh my gosh. I wish I could say this was like a softball and I was just setting you up for it. For context, I mean, Sahil Bloom's trying to get to 1 million. I think he's at a couple 100,000.
Yeah.
But I don't know. There's 40,000 is a ton of people on a newsletter. How the freak did you grow that newsletter?
Yeah. So I grew that newsletter through viral Twitter threads. So through
Okay.
viral threads there. But then I also did for the last yearish, I did paid acquisition where I used either ads or I used Sparkloop or some of these other tools a little bit. I've backed off of any paid acquisition at this point because the quality on some of the Sparkloop was not great. So I backed off of that.
So for those who don't know, Sparkloop is I don't even know what I call it, an ad platform that essentially recommends your newsletter to other people and you pay a certain amount of money, but only if they opt in and only if they remain an email subscriber for a certain period of time. To your point, it's definitely not as high intent as if somebody saw your viral post of yours and was like, oh, I'm interested in Kurtis, so I'm going to go ahead and go and follow him. That's one way you can sort of grow a newsletter. If you don't want to answer, that's totally fine. What's like your open rate on 40,000?
Yeah. Open rate's a little bit hard right now because it's like they've made changes, but my open rate before was about 45%. Now it's been trending between 35 and 45. It's like Google made a bunch of changes and so that impacted it, and so it's like trying to figure that out. But the model with a newsletter is I run advertisers, and so I have a sponsor of each newsletter. I may get to the point where I've developed enough resources on my own that I don't run sponsorships, but right now the sponsorships have been lucrative.
You almost have like a negative customer acquisition cost, right? Because you're getting paid to put out the newsletter, and any referrals that come from the newsletter turn into business. You didn't pay anything. You actually got
Yeah.
paid. So you've got, like,
Yeah.
if you were to calculate it that way, it's a
If
negative
you
CAC.
can, yeah. And that's where I was trying to figure out ROI on paid acquisition, but my problem is my volume's not high enough at this point. So until my volume gets higher, it's really hard to really nail that in. But if I was paying for acquisition of a subscriber, my hope was that I could be negative or net zero with my sponsorship revenue so that then anyone I acquire out of that would have negative or basically net zero acquisition cost.
Are you comfortable talking about like what do the economics of a newsletter look like?
Well, yeah. So my newsletter is a little bit different. If you look at all the benchmarks, being in the financial space is really advantageous for this. I can give a wide range because I don't know. I have some not NDAs with the people that I have sponsorships with. So I'll just give a range and then we can kind of talk about that. But each week I send a newsletter. I collect anywhere between 3,000 to $6,000 to $8,000 a week per send on the newsletter. So that's why I'm saying it's turned into a business of its own. And my goal with that is I'm going to be making some changes to the newsletter that's going to provide some additional opportunities. And so my goal is to eventually get to where I have multiple writers and we even have paid writers and can really become a go-to source for like SMB owners or SMB finance leaders and really kind of the go-to for people in that niche.
All right. So there's a couple different ways that I understand on the newsletter business that you can monetize. You can monetize through selling ads, but you can also monetize from affiliate agreements. Do you have affiliate relationships at the moment?
I have one affiliate relationship, but everything else is just a paid ad. The affiliate relationship is with actually Meow, that bank. And I got to meet, well, I just blinked on his name, their main owner, the main guy.
From Meow?
Yeah.
Brandon?
You just, yeah, Brandon.
Yeah,
Wow.
yeah.
I just
Brandon
blanked on
Arvinagri.
Brandon, but I
No, it's
met
okay.
Brandon. We had a great, great rapport. And so that was one that I supported, but everyone else, yeah, I don't like to do affiliate generally, but I've made that exception with them.
All right, let me try to do some numbers here because you're blowing my freaking mind right now. From what I remember on the newsletter business, I've gotten into podcasts, so I'm like mixing up the two. I thought like a good newsletter is like 10 to 30 or 20 to $30 per thousand subscribers.
I think it was like 50 to 100 per thousand opens is what I was remembering.
Oh,
So,
okay.
so if I have 40,000 subs, that's like 16,000 opens.
Mm-hmm.
So it's like, it's 50. If you're going with a $50 per open cost, it's $50 per 1,000, not $50 per one.
Even if we just said cost per subscriber, right? And
Yeah.
let's just say you're generating $5,000 a month in revenue. That would mean, let's see, I'm going to round up here, 50,000. So that's 50. So 5,000 divided by 50 is what? $100.
Yeah.
So you're like, if the normal range for like cost per subscriber is 10 to 30, you're at $100, it's because you're targeting business owners, right? Like that,
Exactly.
it's a much more valuable audience than, Twitch streamers who want to get the latest game information. That is freaking, oh my gosh, that's fascinating, Kurtis.
It is. Yeah.
Wow.
I would say initially that started out as I valued my time high because I'm like, I'm not going to take on an advertiser for $500 because that's just a pain in the butt for me. And so at first it was just I shot high because I'm thinking it's not going to be worth it for me. And then eventually that turned into, as I grew, I just kept pushing the upper limit on purpose. And you realize with a lot of these finance advertisers, they're in the space that the acquisition of the customer is huge and there's a lot of big contract values. And so even at those rates, you're still cheap for them in relation to acquisition for that customer. So
How do you think about the money that you're generating from the newsletter? Because I just heard this podcast where Sahil Bloom, he's trying to get to 1 million email subscribers, and basically what he's doing is he's taking all the money that he's generating from his newsletter and just reinvesting it into customer acquisition. So I think ConvertKit has like a creator platform that they refer to each other, but there's other ways to get subscribers as well. Are you doing the same thing? Are you like, cool, I'm getting $5,000 a month, I'm just reinvesting that into getting more subscribers to my newsletter? Or are you taking that 5,000 as a distribution, and then how do you think about it moving forward?
yeah, that initially was my thesis as well. Back when Sahil first started doing that, he was under 100,000 subs and he went really aggressive on paid acquisition. And you really saw the flywheel working. He worked with a few different companies on that. And I spoke with one of the guys there and I was like, hey, if they're doing it, I can do it on my own. And so that's when I started kind of the paid ads. What I realized over a period of time is that works really well for them because they're going for a general audience. But for me, that wasn't ultimately getting me in front of the right person. And so I pulled back from that. And my going forward strategy is going to offer free and cheap paid resources to then feed and funnel people into the newsletter. So I have, I guess, 3 now free 7-day email courses that are going to be my promotion channels. And then through that, I'm probably going to test some like ads on different platforms and see how they do. But I'm not going to go with that referral model because I will do free exchanges of referrals, but not the paid ones because you get a wide range of people in that.
Dude, I love the creativity that you're bringing to a pretty boring business. I think that because you're bringing creativity to it, it's going to add a lot more value and opportunity for you. That's really cool. And I mean, we went longer than I usually go because I find it so fascinating with this stuff. All right, I'm going to ask you some rapid fire questions and then we'll wrap up. Is that cool?
Sounds good. Sounds good.
First one, what do you love about this business?
I love that I get to have these kind of strategic high level conversation with different types of business owners because I've always been a kind of learner in that sense. And so I get to learn about different types of business models and extract that data. So that's my favorite part of it.
Yeah, that would be awesome. Satisfying that intellectual curiosity, I think that'd be really cool. What do you hate?
I hate that I have to jump on meetings all the time. I would prefer not to have scheduled Zoom meetings every day, but that's the part of the job that is necessary. So,
All right. So real estate guys are always jealous of SMB guys because they're, you know, we think the grass is always greener and vice versa. The SMB guys are jealous of the real estate guys because they're like, oh, it must be nice to have a piece of real estate that just appreciates every year and generates cash flow. As you sit here in 2024, what businesses or industries are you jealous of?
my biggest piece, and I've tried to figure out ways to really crack this nut in the fractional CFO world, but I think is probably going to be a common answer that you've gotten is the SaaS world, right?
Yeah.
Because you're able to collect money without continued effort. And I guess you could say the same on some of the real estate. Real estate has never appealed to me from the sense of you're taking on debt. It's always a risk measurement. And to me, I'm a little bit more risk averse. And so the SaaS really kind of fits that profile a little bit.
Cool. What are you obsessed with right now? Like if you have 2 hours in your day and kids aren't home and you don't have to worry about work, and what are you doing? What are you sitting down and, or not even sitting down, going out? Like what are you doing?
So right now that's become golf for me. I've been a big golfer, but even to go deeper than that, I'm obsessed with obsession, meaning the
TV
for
show.
years.
I'm just kidding.
Well, no,
I'm just kidding. I don't even know if there's a
I just
TV
want
show.
all the eyeballs. No, what I mean with that is for years, I realized this about myself a few months back. I was so worried about being weird or being outside the normal that a lot of times like I had interest in things and I just suppressed those things because I'd like go down these rabbit holes with business or go down these rabbit holes with different hobbies. And then I'd be worried about I'd be seen abnormal to these other people. And so I was always worried about kind of external appearance. So what I've really tried to dig into over the last, say, 3 to 6 months is if I get obsessed or I get really locked in on something, to really be willing to, like, in a sense, let your freak flag fly, like, right, be willing to share these things. And that's not my nature. And so I'm trying to really do that. So that's been something that I've trying to been ingrained in myself is, like, for example, a weird thing I did, wouldn't tell people for years, but when I got married, my wife sends me a list of my buddies that she wants me to ask for their address so she can send wedding invitations. To me, it didn't make sense to have all these back and forth texts going on, right? It's a waste of time, waste of both of our effort. I knew most of these guys owned houses. So I went onto the county assessor's website and looked up all their addresses. So I didn't have to text them, didn't have to deal with all that. And it's like, it's that sort of stuff that you're just like, man, this is what makes you unique. And this is what I love to hear and learn about other people. So why am I worried about the one person that's like, that's weird, like that's creepy, that's this? No, I shouldn't like you anyway. So I want to find the people that kind of do the weird stuff like that with me.
That's awesome. All right, last question. What advice would you give yourself 10 years ago?
That's a good one. I've spent a lot of time thinking about this because for at least the last 8 years, I'd had in the back of my mind that I wanted to start a business and I didn't have really the courage to do it. And I would tell myself to just keep exploring those curiosities and be willing to take measured risks. Because I think so often we look and we think if we make one mistake here or there, it's the end of the world. But what I've seen from all of these entrepreneurs, what I'm learning is everyone's failing over and over again. Everyone's failing, but it's the people that continue to get shots on goal, that continue to keep trying and doing things, that you have these breakout successes. So I think for me back then, I was so worried about failure, and it would be just go iterate, go try things, go do things.
I love it. Kurtis, this was awesome. Thank you so much for joining me. Where can people find you?
Yeah, just look up Kurtis. It's Kurtis with a K, Hanni on social media, or my newsletter, Frameworks for Finance. So appreciate you
for
having
finance.
Frameworks and Finance. I said for
Frameworks and Finance. We'll put that in the show notes. This was awesome. Let's talk again soon.
A lot of fun. Thanks for inviting me. Yeah.
See ya. All right. That's it. Another one for the books. I'm fired up. I don't know what else to say. I hope you found something valuable in that conversation, I hope you learned something. I hope there's something that you can apply to your business today, tomorrow, in the future that makes you money, makes you more successful, gives you more time with your kids. If there was something, I'd love to hear about it in the comments below. Give me some feedback. And if you like actionable advice and you want more of this, I write a weekly newsletter that gives insights, tips, and tricks into the world of entrepreneurship. Subscribe in my bio. And if I can help you in any way in your entrepreneurial journey, don't hesitate to reach out to me, nick@cofounders.com. Sorry, Kelly, for more emails. And the last thing is, remember, curiosity is a superpower, and you can use it to your advantage. As my mom used to say, there's no such thing as a dumb question, only dumb people. We'll see you next time.